Hey there, traders. Todd here. Got 3 minutes to go until the close, and we're looking at DraftKings heading into earnings tonight. I want to put a quick stock option trade on, talk to you about why we're doing it, and got to watch the clock here. So I can't help but think, in the consumer discretionary space, we've seen some pretty good little green shoots despite the large cap in XLY really lagging. And the big one was Shack. We hold Shake Shack. I hold it in our stock desk at Trade Analysis, hold in the wealth management. And there's been some some green shoots within the less than mega cap stocks. And DraftKings, I think, is a great example. And if we look at the relative rotation quick, take a look at on the monthly of all the casinos and gaming sub-industry within XLY. They've all been rotating out. Okay, all of them with the exception of DraftKings. I mean, Las Vegas Sands, Wynn, Churchill Downs, Penn got wrecked. But DKNG certainly looks different. And then over here on the weekly, you can see the hook as well, right? You can see this really nice hook higher on DraftKings. This one really seems to be standing apart. So I'm liking the look there. Let me just check time. We've got 2 minutes. So in terms of earnings, here's what we're looking at. Company is looking for, the street's looking for 6 cents on revenues of 1.24 billion. Earnings Whisperer is at 14 cents, okay? If you just look at the expected growth, I mean, EPS is supposed to go positive this year, and then 2025 making $1 a share. You look at the expected revenue growth here. Analysts are liking this, and I like the execution here. So if we look at the chart very quickly on DKNG, then I'm going to go over and snap this trade off quick, and then I'll explain it. I'm liking a possible wave 3 move up into the 50 to 51 mark. Now, let me just hit this quick. We've got 30 seconds. I got it queued up. Here's what I'm doing. 45, 50, 55 call fly. Let's see if I can get it off. I'm going to pay what they want, 1,008. So 1,000 to make 3,900. Let's see if I can get it. Oh, come on, market makers. See if you can get for me. 10 seconds. Cancel replace. Let me go up. I'll pay a little bit more. Come on. Oh, I didn't get it. Shoot. Oh gosh. Man. Now it's definitely going to work. Anyway, all right, well, the option trade didn't work, but what I do need to do is go buy, I need to buy some extended. So we are also increasing the position. We're increasing the position in our stock swing desk as well. So let me go ahead and do that. We're going to go extended, trading 44.70. Let me just go to our active trader. Then I'll go over and show you what's going on here. So let me go buy, edit. In the extended hours, which is going to be, I think it's GTC here, 44.70, trading 44.56. Let's just back it off here a touch and filled at least on that. So, okay. Well, we'll see what's going on there in DKNG. But, I did want to, an option trade's definitely going to work now. But let me just show you what the wave count is. Obviously, this option idea came around pretty quickly. But if you look at the wave count here, I love the potential wave 5 move that's going to go up into the zone of resistance. You have a 1, 2, 3 fib zone cluster around the 51 to 53. So I want to structure the option trade. I wanted to structure around that. I know it's not a lot of help now. But the entry on our position on our active stock desk is at 40.25, stop loss at 36. Okay, so I increased the holding just by a little bit there, and I wanted to get the option trade off. And if you think about that 51 to 52 area in DraftKings, like if you look at in DKNG, so we're going out of 44.70. The expected move is $5.30, right? So that's the plus and minus 1 standard deviation. And if you look at the implied vol, it's 287% for the options that expire tomorrow. And then when we're done next week, it goes down to 114, 88, 77. So ton of vol in that in this move, which means the options are really jacked up. So the expected move through tomorrow is $5.40, and then the expected move into tomorrow morning's open for the earnings is $5.30. Going out at about 44.5, 44.60 plus that $5 gets you into that $49 to $50 region, and that really matches up quite well with those 3 fib zones that I just mentioned to cap off potentially a 5-wave move into that zone. So I was trying to butterfly it off to see if we can get up into that key $51 to $52 zone. That's why I was trying to do 45, 50, 55 call flies. So we shall see. And again, I love the relative rotation on that. And then, you know, the other one that we have is Shake Shack. And let's take a look at that one. This one we hold in the stock desk. We are long from 78, closed at 97 today. Here's the hedge I think I told you about. I'm only showing you some of the positions. And then there's DKNG on this stock swing desk that we run for trading analysis customers. Okay, so there's DKNG 40, and we just added, I think it just got filled at 44.70, and I'll update that. So adding to our position there in DKNG, and again, this is what we run for our clients at TA. So if we look at Shake Shack, though, these earnings were good. They beat the street. The consensus estimates were like flat at 0. They came in at like 2 cents. The guidance was strong. The margins were very good. They're opening more stores. Like their quest for efficiency was set out last year, and they certainly seem to be attaining it. So if you look at the daily from the technical point of view on Shack, this was a big breakout, guys, and this might be 3 of 3. This is a big deal. If you look at this wave 1, so the way you do this quickly is, the starting point for a wave 1 is going to be the same percent distance traveled. Okay, let me say that differently. The expected target for wave 3 is at least the distance traveled in 1. This was 113%, and 113% would put you right at that blue $112 mark, which is 113% right there, right? So if this is, in fact, wave 3, this is your minimum target in blue 3. Your textbook target is the 1618, because usually wave 3s are longer. So that's significantly higher. That's a long ways off. All right, so within wave 3, you need 5 smaller waves. So let's do the same exercise, right? For a wave 3, the minimum distance is the percent distance traveled in 1. So we just pulled 3V1 down. That was broken at 93.27. So I think the next target is going to be up here at 117, all right? Now, one critical level that you want to be watching that we always watch is the 786 retracement of a significant recent decline. And 786 is like the most important retracement you can look at, because there are so many stop runs that occur, I think, through the 618, the traditional 618 retracement, which is right here. Well, the stops got wrecked. Anybody who was short against this, because we just gapped through in earnings. The 786 is the site of like many spectacular reversals. So this is a key zone 104, the 786. The 100% I already discussed. And that's also the 1618 of minor 3. So altogether with Shake Shack, we are really moving into a very key decision zone. I know there's a lot of fib here, but the zone is going to be from 104, 112, 117. I'm going to hold on. I'm going to look to actually add on this on any kind of pullback to see if we can get up into this decision zone in Shake Shack. Now, I don't know if any of you would disagree with me, but Shake Shack is awesome. When I was first prop trading in college, right out of college, I would live on In-N-Out Burger in San Diego. I think In-N-Out Burger is head and shoulders above everything else out there, but I think Shake Shack is a pretty close second. So, you know, we can't invest in In-N-Out. I think that'd be an amazing IPO. Comment on the video if you agree on In-N-Out. Is it Shake Shack, In-N-Out, or do you like something different? But you know, this is the makings of a third of a third. So you know, I'm liking some of these names in consumer discretionary. So we had Shack, and it was a really nice day. And let's see, is DraftKings out? Let's see. You know, and before I even look at this, too, I don't know if the earnings are out, guys. These butterflies I'm doing, I was risking like, you know, I had $1,000 in total premium to make about $3,900. Probably, if the trade didn't work, probably could salvage, you know, $200. So I'm risking like $800. It's very, very small trade. It's kind of a fun, you know, it's sort of a gamble, so to speak, on earnings. So, you know, it's a very high implied volatility. So that's like to butterfly it off because it's a less, you have less exposure to the IV crush, implied volatility crush after, you know, the inevitable IV crush after earnings. So. But I love holding more of the stock, and you know, I just added this little position right here. So let's see, is it out yet? It is not. And let me just see if people. Let's see. Hello guys, what's up? Yeah, we'll see. Anybody holding DraftKings? Anybody hold it? Anybody wanna do it? Anybody get filled on that trade where I didn't? Can't believe I blew that trade. It's gonna work now that I didn't get filled, guaranteed. Shack 150, yeah. Time is it? I don't want to hang around too long, but yeah. So there's Shack right here trading 44.90, so that's fine. And I only just, you know, this is just the account I trade over at for trading analysis. So I just put those little 100 shares on there, and that's upping the exposure in the stock swing desk. So all good there. Shake Shack was ripping, and you know, I think that the consumer discretionary space is still struggling. There are green shoots, as I mentioned. You know, I love this hook in DraftKings, really nice hook where a lot of the other guys are really struggling. You know, and the other thing I was looking at is the large cap consumer discretionary. So I sort of bucket off, you know, the market capitalizations within consumer discretionary. The biggest guys, you know, Amazon, Tesla, Home Depot, McDonald's, Nike, Bookings, Lowe's, TJ, like, I mean, they're not looking great. And we know what's going on with Tesla, right? We know what's going on with Tesla, even with the strong day-to-day. But you look at the rotation and all the other big XLYs, I mean, TJ, no good. McDonald's, no good. Lowe's, not even great with that good upgrade. Home Depot is a little bit of a hook. Nike looks terrible, and Tesla, we know what's going on there. And Booking is on a nice track. Amazon's doing better. But, you know, these are the top 10 or so market caps in consumer discretionary. It's no wonder this sector is really lagging. Over on the weekly, it's a mess. Tesla's out, Nike's out. McDonald's just did a nasty hook down. That's no good. Nike is going to look terrible. Look at this big rotation out. Nike looks terrible. You look at Crocs. That's another one we should talk about. I'm going to give you two more. I'm trying to buy time until earnings, so we'll see if I was right or wrong. But the consumer discretionary space a lot of it's a mess, but there are some green shoots in this. Julius de Kempenaar and I, we did our sector industry stock report today, and we looked at some very specific names in here within the rotation, and there's some we want to keep an eye on. Let me see if I can do this real quick. Watch some of the shoe companies. Crocs finally broke out of a big triangle. Let me see here. Where's Crocs? Crocs reported earnings. Footwear. That would make sense. So let's take a look. Deckers, Skechers, Crocs, Nike. We know Nike looks terrible. Let's see what the RG looks like on these guys. Oh, Crocs. Crocs. Let's put Steve Madden in there. Steve Madden. Remember Wolf of Wall Street? So bad. So let's see what the RGs look like here. So shoes actually making a nice reversal. Crocs no good there. Skechers no good. Dex is something I hold. I mean, this is the company that owns UGG and those Roka shoes or Hoka, whatever they are. So everything else is sort of rotating out. Even Deckers, Steve Madden, Skechers. I cut Skechers, Nike. Crocs has got a little bit of a hook. And if you look at, you know, and where's ONON too? That should be in there. I want to see ONON. Now, Crocs and ON, like if you're a 40-something-year-old dad, you don't really care what you look like anymore. You're married, dude. You're rocking Crocs. You don't care what anybody says, and you're probably wearing the ON running shoes. Like those are like standard dad issue footwear. So I'm waiting for ON to finally come out and reflect, I think, the earnings that they're capable of. Where's ON on the rotation? Okay, look at that next little hook. Tried to come up from weekly, lagging and improving, hook back down, and then just shot back up. So, you know, the heading that I like the most are the dad shoes, ON Holdings and Crocs. And if you look at the technical position let's look at both. Let's start with Crocs first. I should have my Crocs on as I'm doing this video. But this is a really pretty longer term wave count in Crocs. Big old, huge, massive wave 4 triangle. And we just broke out of it. And let's see, do we have any volume coming in? A little bit of volume there before on Jan 5th. And then we have one more day to go in this weekly candle. But nice big old triangle here in Crocs. Crocs are coming out. Crocs are cool. Don't let anybody else tell you otherwise. But a nice completed Elliott triangle here, and we should be able to move up provided we hold newly formed support that was formerly the artist known as resistance. So we should be able to move up. So I'm liking Crocs, and then as I said, the other standard issue dad shoe is ON, and you know these are the only shoes I can run it on the treadmill without my knees hurting. I think they're great. The street has not been recognizing, I think, the potential in this company because their earnings aren't quite there yet, but I think they will be. Again, same deal. If this is wave 3, you know, this is diagonal up in 1, down in 2, nice big old 2 into the 618, 786 retracement. Your minimum target's going to be 100% 3V1, and then your 1618 is your ideal target. So 35 up to potentially 43 in ON, and we already went over Crocs. All right, so that's a quick spin through consumer discretionary, and we're kind of waiting for DKNG. All right. DKNG longer term, sure, I'll take a look at that for you. It's a new stock, right? So there, you know, it's hard to do wave analysis on a brand new stock because there's just not a lot of history. But I always want to look at the 786. That is the most important, and that's at 48 off of that low. So that's going to be the deciding point. And as I said, off the lows, we are looking at a 5-wave move, and this is at 48, 51, 52. That's the big decision zone, and that's what I was trying to trade towards with that option trade, and I just didn't leave myself enough time. We literally just had a 2-hour team meeting that we just got done with, and that's why I'm late doing this video, trying to execute options 1 minute before the bell. All right, well, I don't think I can buy any more time for earnings to come out, so we'll leave it there. Guys, have a great one, and talk to y'all soon. See you later, guys. Good luck trading out there. Bye.